Welcome back. This is Open Exchange, and we are coming to you live from the CNBC TV 18 Motilal Oswal studio. Well, a good time to get in some derivative strategies. We start a new series, remember, today. Manoj Muralidharan, the VP Derivatives at Religare, joins us on the show. Hi, Manoj. Good morning. What's the strategy you have, first of all, on the index? And fill us in with your picks as well.
Good morning, Nigel. Nigel, I guess there are a couple of indications more into the quantitative side that we need to understand every time a contract starts. So simply we'll go with the FI stats first. They are starting this month with a good 81% of short positions, which they did in Jan as well. And Feb being the event which we had, the union budget as well, they were a bit less cautious, I would say almost at 9.2%. So whenever the FI starts with such a 80 odd percent, anything above 75%, we generally see that the positional trend, when I mean by positional is which has a good 300, 350 points move on either side, would be at least a sell on rise. Now, we are starting with almost 1.05 crores in terms of positioning for the Nifty. What we did last time was almost 98.7. So a good 3 to 5 odd lakhs positioning in the Nifty has happened. Now, whenever you see during rollovers, the meat of the open interest is usually in the short rolls, and then intra-month you see an addition of, let's say, 10 to 15 odd lakh. That's how a month pans out. So we believe this entire average of short position that the index has or the Nifty has is somewhere close to a 17,850. So that gives us enough room for a bounce of almost 250 to 300 points. So at least for the short term view, we are not negative. We expect the Nifty to bounce to almost 17,750 to 17,800, 820 roughly on the futures. And that can be clubbed with the Bank Nifty as well, because this weighted average price of short position that we have in the Bank Nifty is almost at 40,372 precisely. And we believe IT as a sector, these three can club and give us a bounce. So the trade or the strategy for this weekly expiry would be to buy a 17,700 call option. You can buy it for 50. The target can be 102 as that. Or if you're going for a future, we can go long. As I said, the stop loss would be somewhere close to 17,500 to 520 with a target of almost 17,750 on the futures.
And individual stocks?
Stock specific, Sonia, I guess we believe IT and FMCG is almost at 92% in terms of roles, and there are a couple of good stocks with good base building. So Infosys at 1540 to 1548 becomes a good buy with the stop loss 1520. We expect a good move, almost 1572 to 75 on that. Tata Motors also at almost 420 to 428 becomes a buy, a stop loss of, let's say, 415, and we are expecting this entire month of March to be somewhere close to a 450 as a target for the stock as well.
Okay, thanks a lot for that, and have a great day, Manoj. That's Religare Broking with their views on the F&O space, how the series could shape up, and individual stocks as well. We're just heading into the pre-opening rates, and looks like it's going to be a good Friday, at least a good morning so far. The Nifty is up about 1%. I don't know if that may play through in its entirety, but there's definitely a pickup. The rupee has also recovered, so 82.73 was where we closed yesterday. 82.68 is the opening on the rupee, and banks are seeing a bit of a pullback. HDFC Bank, ICICI Bank, etc. But let's get Gurmeet into this discussion now, back into the discussion. Gurmeet, in the last couple of days, I'm sure you noticed that viral picture of DLF's luxury property, and the kind of broker chaos that was outside their office as well to sell their Gurugram project. And talk is that they sold over 1,100 flats at 7 crores each in just 3 days. Now, the company has not confirmed it, so we don't know whether that data is accurate. But do you think that this space is something that investors should look into once again? Luxury, premium real estate?
Sonia, I think that number would be correct. A lot of my clients have bought, so I can confirm that. I think there is an interest for two reasons. I think the prices in Delhi have found, NCR is probably found by 15-20%. Delhi is like 10-12%. Then there is that capital gain deadline of, where if you want to offset capital gain more than 10 crores, you have to do it before 31st March. And in general, there is an interest in real estate. North, it's always higher. So I think selectively you can. I think I'm overall very constructive on industrials, capital goods, bit of real estate plays, because I'm of the camp that we are seeing a capex cycle driven by government and picking up in few pockets as well as private is concerned. So you can play that through the L&T, which is a bellwether one, and some of the MNC names in capital goods like the Siemens, etc. And the other way is to do through cement And if you want to take a slightly more high risk reward route, it's to real estate players. So I think even if you see DLF, the numbers are very good for Q3 as well. They did almost 2,500 crores of pre-sales, and I think they will exceed that 8,000 crores. I think by at least 1,000 crores in terms of pre-sales is concerned. They're also delivering well on the rental side with downtown Gurgaon coming, and then later on you have Chennai coming. So that is also a contributor of more than 1,000 crores on a quarterly basis. So I think the risk reward is there if you are slightly in for the long haul.
All right. By the way, the talk is, Sonia, that the allotment is happening to those who are willing to take, city facing, not too much sun. I mean, so that's the flats which are being sold at about 17,500 rupees per square feet. The real prime property will perhaps be sold after a price hike. That's what I was told.
If there's a 7 crore flat, I'm okay with no sun. I'm okay with no city facing.
Trust me, you won't be, Sonia. Actually, for that money, you want all the sun. You want all the the lovely grass to open up to and all of that.
But Gurmeet was saying his clients have bought. Gurmeet, have you bought? That's the big question.
No. I only manage client money, Sonia. That's not my money. So and I don't know. I think there is it's a golf course extension road, and that's commanding like 20,000 rupees plus square feet. It's phenomenal.
Yeah, no, absolutely. Gurmeet believes in growing the money, not spending it. His wise. Thanks very much, Gurmeet. Appreciate you joining in, and it's a pleasure, as always, having you here on CNBC TV 18. All right, let's put the focus on Zee Entertainment. The company has moved NCLAT, the appellate tribunal, seeking relief against the NCLT order. NCLAT will hear Zee's plea today. How should we think about this entire issue? The stock saw some damage yesterday. Balaji Subramanian is Vice President at IIFL Securities, and he's here to tell us exactly that. Balaji, good to have you with us here. Thanks very much. So for investors, what's most important? What would you watch out for from this hearing, and what should they be doing?
Hi, good morning. So on this matter, I think things are a little bit hazy right now. So a couple of days back, we had this admission of the insolvency petition and the order with regards to initiation of insolvency proceedings against Zee by NCLT. And Zee has been quick to move the NCLAT against the NCLT order. So I think one has to see as to what happens today. And hopefully the issue gets resolved soon. And I mean, it's very difficult to comment on what NCLAT might do today. But I think one outcome could be that NCLAT asks NCLT to look at this issue afresh. Or the other scenario could be that NCLAT doesn't set aside NCLT order, and Zee probably appeals to some higher authority like the Supreme Court. So I think it's wait and watch, and today it might be a little bit of choppy when it comes to trading.
Okay, yes, I think Zee traders are kind of used to that, right? The choppiness and the volatility. But the big question is whether the merger goes through in its entirety. And I think the Zee management has committed for a timely completion of the merger. What's the sense you're getting?
So that's what I said. So it is good to note that Zee's MD and CEO Puneet Goenka has gone ahead and stated his commitment towards closure of the merger, and the speed at which Zee moved to get the NCLT order challenged is also quite encouraging. But I think, all boils down as to what happens to the insolvency petition hearing, because in case there is an adverse outcome, I'm not really very sure as to how things can pan out, because at the end of the day, Sony will also be watching it. I'm sure they would have done their due diligence when they got into the deal with Zee, because all these issues with respect to the DSRA guarantees that Zee has given its lenders with respect to Citi, all these were pretty old issues. These issues transpired about 4 or 5 years back. And I'm sure Sony would have done their homework before signing the binding agreement.
Right. Balaji, so, if there are an appeal, perhaps, right? Either they settle, they appeal, or they get a stay. right? I mean, those are the three scenarios in that sense. Would the current price be attractive for investors to buy? There are other contingent claims as well. The total, including this one, which is about 85 crores, the total claims are amount to about 440, 450 odd crores. Although, I mean, the issue at hand is this one, the 85 crore amount. What's your sense?
See, if you look at the total claim, as you rightly said, it is 440 crores, around 440 crores. Out of that, around 211 crores pertains to it's more of an operational dispute between what they have with the IPRS. So in a way, they are not financial creditors, and probably that is an area where there can be some bit of leeway. I think the one which is a little bit worrisome for me is the remaining 240 crores or 230 odd crores, which is exposure to lenders, which is IndusInd Bank and IDBI Bank. So I think that is where things can get a little tricky. But if one were to take a call that at the end of the day, you just pay this 400 odd crores, I'm sure that is not something which Z would ideally want. But at the end of the day, if the merger itself is in jeopardy, then probably paying this 400 odd crores and moving forward is also a possible outcome, because otherwise it gets the process just gets delayed, and already the merger has got delayed, because when they announced the merger in December 2021, they were talking about an 8 to 10 month timeline, and we are almost 15 months from there. So I think way Z would want to get away with would be to, in the worst case, make the payment and proceed with the merger, rather than kind of hold the entire thing at the ransom of the bankers.
Thanks a lot for joining in. Appreciate your thoughts. That Z, it's still down almost 5.5%. So a lot of volatility perhaps is, is something you can look at, as well as there's no clarity on whether the merger goes through in its entirety, whether it's timely completion of the merger. Everything will depend on the NCLAT appeal that will be heard today. Well, let's do one thing. Let's get the pre-opening rates settling in at about 80 points higher on the Nifty. Couple of stocks do deserve mention, not just Z. Axis Bank, the company is quite hopeful of the acquisition with Citi to be completed by the 1st of March. So Axis Bank in focus. Pre-call as well after the conference call takeaway. So lots of stocks to be tracked. But let's get our technical gurus to tell us what's the big call at 9:10 this morning. Mitesh, what are you looking at?
I'll go with a buy on Coforge. Keep a stop at 43.90. Look for targets of 44.80.
Buy on Coforge. All right, got that. Well, the other stock that we're looking at this morning is Lupin. Now, the management had met analysts, and Nomura put out a note where they have a buy with a target price of 856 on Lupin. They speak about how the outlook for the US generics business, particularly in oral solids, is very challenging because of competitive pressures. And that is the overarching theme for most companies in the pharmaceutical space. The US generics business has been under a lot of pressure. In this scenario, Lupin would selectively pursue complex generics in inhalation and injectables. The management, however, is highly sanguine on the Spiriva approval and the launch in FY24. And they talk about how the India growth will revive only from the second quarter of FY24, and they target a growth significantly ahead of the broader market. But I think the stock, there could be a lid on the gains for the stock purely because the US generics business is seeing a lot of competitive pressure. There's pricing pressure as well, and that's not going away anytime soon. And that's what the Lupin management has alluded to.
Okay, all right. So that's about Lupin. I'm looking at two stocks, the stainless steel stocks, Jindal Stainless as well as Jindal Stainless Hisar. This merger between the two entities was announced, I think, in late 2020 in December. But now, in fact, the record date has come about finally. March 9th is the record date for those who want to be part of this. Well, you have time till that date. The merger ratio, well, that's already known. 195 shares of Jindal Stainless will be given if you have around 100 shares of Jindal Hisar. Now, Jindal Stainless is opening up with a gain of around 1%, but my guess is Jindal Stainless Hisar, let's pull that up, that the gains would be far more on that one because there's an arbitrage out there. If you buy the shares of Hisar, well, you'll be getting, Jindal Stainless shares, and currently you gain close to around 7.5%. So that's about the stainless twins. Moving to NMDC, late last evening, late in trade actually, the Supreme Court, they passed an interim order directing the Karnataka Environment Body out there to pay 50% of all the contribution that NMDC has been made since 2019. Now, Nuvama, they have quantified this. We told you it will be in excess of around 1,000 crores. Nuvama has confirmed that it's around 1,400 rupees odd. So, and from now on, so that is a one-time booty that they get. And going ahead, in fact, they'll start paying only 10% of the sales in comparison to 20% earlier. So because of this, they've raised their other income, and that's why they've raised their EPS estimates by around 30% just for FY24, though they retain a hold rating. Motilal Oswal, they have a buy rating with a target price of around 155 rupees per share. They believe the company is perfectly poised to participate in this growth story that we like to see. Volumes will pick up. Price increases have been affected as well. So, the stock is opening up like it's down, but it's gone ex-dividend. So that's why it's down. Otherwise, it's higher with a gain of around 1%.
Okay, well, it looks like the market is also going to open in the green, right? So 80-point higher on the Nifty. The Bank Nifty is up about 0.6%. But the Bank Nifty, as we know, has been a big problem area for the market. So let's see if that recovers. As of now, it's hovering around 40,200. The fall has been pretty steep this month. If you look at it, a lot of stocks, Adani Enterprises, Divi's Labs, Hero MotoCorp, are indicating an opening in the green, which is merely a pullback because these are stocks that have seen a huge fall this month. Adani is, of course, down over 50%. HDFC Life is down 16% this month. Divi's is down 14% this month. And Hero Moto is down about 10%. So it looks like the laggards are going to come back in, a small way this morning. And then a couple of other pockets that you'd want to look at. IT. There's been some support that's come in the last few days. This morning as well, Tech Mahindra up about 0.7% and Infosys as well. There's some global data coming through later in the evening, so we're going to track that very closely. There's personal income and consumer spending that comes out in the US, so all eyes on that as well. Here's the first tick on the index, though. It's a mild shade of green, not dark green. So for now, 70 points higher. I think the bulls would take that. The Sensex is up about 200 odd points. Let's see if we can build on those gains. And the Bank Nifty is attempting to pull back, so 227 points in the green. Advanced decline ratio is also decent, actually. 1,300 stocks on the advancing side. And you have a lot of names. Adani Group stocks are coming back. As I was telling you, the list of gainers today is pretty much the big losers of the month. So some pullback. Adani Enterprise, Adani Ports, Divi's Labs, something like SBI, which is down about 17% from its highs last year, is making an attempt to pull back. Infosys, IndusInd Bank, Axis, Britannia, Dr. Reddy's are the other big gainers in trade today. On the downside, ONGC is under pressure. ITC is down 0.3%. Hindalco, Eicher Motors, Titan are a couple of other names that are just a tad bit soft and not contributing to the market. In the broader markets, there are many stocks that Nigel will talk about, Zomato, etc., that are in the green. But for now, the headline index is not doing too badly. It's a decent showing. The big question really is whether this gets sold into, because that's been the nature of the market for the last many days. But time will tell. For now, it's a decent opening.
Well, it's a good opening, Sonia. And the couple of stocks that we covered at around 9 a.m. NNPC is actually higher with a gain of around 1% because you've got 3.75 rupees if you bought it yesterday. So you add to that, it's actually adjusted up close to around 1%. Jindal Stainless as well as Jindal Hisar, the first tick was in the green, so both of them come up for you on the screen. And a couple of other stocks that are moving around. You have KSB. Well, they came out with a set of numbers, and those numbers look quite good. So that stock, I think, is up close to around 6%. Reddington, in pre-market, well, there was a large trade. More than 20% of the equity changed hands. It could be, inter-transfer, or maybe, in fact, we'll find out who's the buyer. But there's just one entity out there that has such a large chunk. In all probability, it could be them. That's, Cinex Mauritius. So we'll have to keep an eye out on who exactly was the buyer out there. RVNL, well, that's opened up well in the green, so just keep an eye out on that one. SpiceJet, I think you should keep an eye out there because they'll be considering issuing equity shares via pref today. So fundraising options today. And Sanofi as well reacting to its numbers, which look quite good. The margins expanded, good growth, is what we saw on the EBITDA front, though the top line was more or less flattish. So up close to around 4% out. So pretty good start from the broader markets as well.
Okay, pretty good start from the broader markets, but let's see how long it lasts, right? Because the Nifty is now up about 60 odd points, but now the losers list is going up. So earlier it was just ONGC, now there's Titan, HDFC, Eicher Motors. In fact, this month, the HDFC group of stocks have not had it good. HDFC Life has lost 15% this month, as I was telling you earlier. And HDFC as well has been a bit on the lackluster side. So let's see. For now, 17,580 is holding on the index. So we are pretty much holding above some key levels. The 100-day moving average is still 17,997. So that's still some way off. But and so is the 50-day moving average. But let's see, the climb is slow, but it is steady. Strides Pharma, by the way, US FDA has issued an establishment inspection report for its Bengaluru facility. That's a good thing. 2% higher on that stock.
All right. Strides Pharma on your screen. 305, 306 or so is where we are at. Let's just take a quick look at the indices, and then we'll have Gautam Shah join us. So 70 points, 0.4%, 17,581 is where the Nifty is at. The Bank Nifty had a positive daily close yesterday, 5-6 odd points. That's been the much weaker index. That's about 0.5% higher as well, 4190. Let the market tell you it wants to base out turnaround. Because, after a brutal 5-6 day fall, 600 points in the Nifty and more than 600 points and about 1,400 points in the Bank Nifty, you would want a little bit of stability, some time spent doing nothing without falling before one starts to feel comfortable about going long and staying long. Gautam Shah is with us, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much for your time. What is your view now, index-wise? I mean, I think that's question number one, right? I mean, are we entering a period of more pain here, or with the correction that we've seen over the last 5-6 days, we go a little sideways for some time? What's your sense?
Good morning, Prashant. Well, since the middle of December, this market has displayed characteristics of a short-term downtrend. I think there's no running away from that, because the market has seen attempts to rebound a few times in the last 2.5 months. And every time those attempts have been extremely fragile. There has just not been any leadership on the upside. The momentum has been very, very ordinary. And despite global market support, Indian markets have not been able to make the most of the opportunity. So I think for almost 8 weeks now, we've been maintaining a bearish stance, and that continues. And the manner in which the Nifty has corrected in the last 1 week from that level of 18,000, 18,100, I think is enough testimony that there is clearly a lot more pain ahead. So there are no signs of bottoming out. There are some supports in that 17,350, 450 zone, because that's close to the budget day low. And pretty much everyone in the country might be watching that number. But given the evidence on the table, it seems that that number will break and possibly take the Nifty down to that 16,800, 900 area. And, again, the problem is, if you look at the leadership side, the Bank Nifty, the metals, some of the other major sectors in the market, they're all pretty weak. So I think markets are likely to see a lot more downside ahead. This is not going to resolve in a hurry. This is not a plain vanilla correction, as I highlighted in our last interaction as well. So one should be prepared to sell on any recovery.
Okay, one should be prepared to sell on any recovery. So that's your base case for the market as a whole, that this could be a sell-on rally market through the course of this year? Or are there some levels to watch beyond which you think that it will become a buy on dips again?
Sonia, I think 1 year is too long in today's world, because there is so much happening, every 2 weeks, every month. So you want to take it one step at a time. But at least for the next couple of months, at least, the markets are likely to remain in a downtrend. And because India did not make any use of the global strength, and now with global markets coming off, with what has happened in the last 4 to 5 days, I think this downtrend is going to stay for some time. In terms of levels, I think I've mentioned this last time as well, till the Nifty does not get past 18,050 on a closing basis, I will maintain this bearish stance. And the problem is, right now, the weakness is really in the top 100. I think the mid-cap and the small-cap indices are close to some very, very important support levels. And if those were to get violated, another 5-7% downside on those indices is also likely.
Can you explain that? I mean, the mid-cap and small-cap indices, which are these levels? And, just a little bit more there on that part of the market, Gautam?
Well, if my numbers are correct on the NSE Mid-Cap 100 Index, I think 29,800 is the number that we are watching. I think we've tested this number 4 or 5 times in the last 1.5 months. And if this number were to break, I think a 5-6% fall on the mid-cap index is entirely possible. And even on the small-cap index, I think 9,100, 9,200 is a huge support. If that were to break, then you are in for more trouble for small caps as well. See, any which way, the broader markets have been in a bear market for the last 15 months. There's no taking away from that, because if you study 1,700 stocks listed on the NSE, 1,800 stocks, you'll notice that a large percentage of stocks have lost anywhere between 40 to 50%. Just because the Nifty made a new lifetime high in December at 18,900, you can't say the same thing for the Nifty. But the broader markets are in a bear market since 15 months, 18 months.
You are quite bearish this morning. far cry from your earlier stance, I guess. I mean, of course, you were cautious last time around as well, but this is full-blown bearish views from your end. Got it, but it's important to note that, we are in a very challenging situation. What is happening with banks? Because, that was the big heartburn, right? I mean, PSU banks just started doing well in 2022, and bam, there comes that, big fall from the top. Do you think there's a reversal in store? Would you stay away?
I would completely stay away. They say you win some, you lose some. And I think Bank Nifty was the reason why Nifty did so well in the second half of last year. And now with what Bank Nifty has done in the last 1 month, clearly there are very discouraging signs. In fact, the PSU banks have come under a lot of pressure. You could say collateral damage, but that's what the charts caught a month back. And even now, I think 39,600 is really the line in the sand for the Bank Nifty. We've reversed from that number a couple of times on the budget day and yesterday. So maybe a little bit of a bounce is very normal. But if this 39,600 number were to break, I see at least a 2,000, 2,500 point fall on the Bank Nifty. And my working targets are at least 37,500, if not lower. So banks are really the problem. And if they don't do well, the entire texture of the market is, something else. And to top it, Reliance as a stock continues to underperform, continues to be quite negative. And it just didn't do anything, in that period when the Nifty went to 18,900. So both Reliance and banks put together, I think will put pressure on the market going forward.
Hi, Gautam. Good morning. What are the crucial supports, though, on the Reliance stock? Because that can hold one end up. And also your view on IT, on tech. The index saw a bit of a bounce, but then it's come under some pressure, though today it's holding well in the green.
So Reliance, I think as a stock, we remain bearish because in the good times, it did not participate. 2,300 was a major support. From there, we've seen a bit of a rebound. I think it's temporary. I think it's normal. And I think the ceiling for Reliance is around 2,450 to 2,500. I would say there's a very high probability of 2,300 breaking, taking the stock all the way down to levels of 2,050 to 2,100. So a 10% drop in a stock that is 11% weightage on the index is quite likely. IT, on the other hand, is the safe haven. It's a place where people are hiding, where smart money is hiding, and rightly so, because everything else has been so weak on an overall basis. And I think the IT index can actually appreciate 10% from here. So there is a lot of alpha to be made in the IT space, and that's what we've been recommending to our subscribers at Goldilocks. And I think all dips in the IT space should be bought into. The top names, the mid-cap names, everything is quite solid there.
Just a few names, maybe you want to weigh in on these specific names, Gautam, but these are also, kind of flag bearers of the consumer sector, right? I mean, one is UBL. There was a double top at about 1,800, stocks now at about 1,450. We'd highlighted this in our segment, Market Laser, earlier. Page Industries is, again, it broke an important rising trend line sometime in December last year, 14th of December last year, at about 47,000, now at about 38,000. Big correction there, Page. And the last is Barbecue Nation, right? A QSR company, lots of hopes, big market, and an aspirational consumer kind of sector, business in that sense. Any thoughts on these names, UBL, Page, and Barbecue?
Consumption is not working, Prashant. It's quite a dichotomy that we talk about India consumption, India story, India's decade. And if you see the worst performers of the last 15, 18 months, it's basically consumption stocks. And, and many of them, Jubilant Foods is such an amazing case in point that look at the kind of weakness that stock has seen over the last 15 months. So I think many of these stocks were actually very richly valued. They started getting very weak on the chart 6 months back, and they're all correcting right now. So I don't see consumption picking up anytime soon because they have been the punching bag, and there is still a lot of room on the downside. The problem is a lot of people are looking at markets from where they were and where we are right now. I'm telling a lot of people that look at where we were in March 2020 and look at in that context, the kind of rise that we saw in the last couple of years. In that context, the fall so far in the last 6 months hasn't been as large. And that's probably the reason many of these stocks have a lot more room to fall.
Okay, well, if you're talking about lower end or rural consumption, right? Urban and high-end consumption has picked up in a big way. Of course, there are several reasons for that. We're just talking about real estate as well. I was looking at the data that Knight Frank put out. More than 2 crore ticket size homes per year were languishing between 2,000 and 3,000 units for the last 5 years. But in 2022, that has gone up to 13,000 units. Of course, there are changes in the budget as well, which perhaps led to people, quickly buying that luxury homes. But for realty particularly, what are your thoughts? I mean, do you like this space? Any of the stocks, DLF, or even, you know, the Oberoi Realties of the world?
See, we like it from a longer term perspective, but because it's high beta, you can't be bullish real estate and bearish on the Nifty. You know, that's the problem. So that's probably the reason you will have real estate also gradually drift lower. But still, I think if you have to pick anything for the next 12, 18, 24 months, it has to be only DLF and Oberoi Realty, the two stocks that you alluded to. We like them from a long-term perspective, but I don't think anything is going to happen in a hurry in the near term. I think many of these real estate stocks have more room on the downside, because if the Nifty corrects another 5-6%, they will correct equally or maybe a little more.
Okay, all right. We will leave it at that, Gautam. Thanks a lot for joining in. Appreciate your thoughts and have a great weekend. That was, of course, quite a bearish Gautam Shah, saying that there is more downside in the market left. Consumption has slowed down quite a bit. And in the Bank Nifty as well, we're not done with the fall just yet. He has been cautious for a while, but I think this time around, it's been the most bearish that at least I've heard him in a while. So let's see how things move around. TTK Prestige, since we're talking about consumption, let's take it forward with TTK Prestige. They posted a disappointing set of Q3 earnings with pressure seen across categories, pressure being the key word, no pun intended here, but the company witnessed a 9% decline in revenues and margins contracted to 11.5% from nearly 17% earlier. How is demand looking? TT Jagannathan, the chairman of TTK Prestige, joins in to talk about that. Mr. Jagannathan, good morning. Thank you for joining us as always. It's great to see you after a while and in good health. Can you tell us, is there a real slowdown? I mean, not just in your business, but in the rural, semi-urban market? And if yes, what is the reason for it? Is it just inflation pinching pockets? And can you quantify it for us in some way for your own business?
Yes, there is no slowdown. What happened during COVID is that we got a large share of the wallet. There was no going out, there was no eating out, no going to movies, no travels, no holiday. Everybody was at home, so we got a very large share of wallet. This year, everything is opened up. People are eating out, people are going. So it is smaller share of wallet. If you look at that, compare us to pre-COVID, we've grown by 25%.
Okay, sorry, what did you say? Compared to pre-COVID, you've grown by 25%, is it?
Yes.
Okay, and in Q4, how is the demand situation? Across categories, are you seeing any signs of a slowdown even compared to pre-COVID levels?
No, it's way above pre-COVID level, but it slowed down compared to last year. Last year was a boom year. We grew top line by 25%, bottom line by 32%.
In the pressure cooker segment, I wanted to just check with you. In Q3, I think your sales were the lowest in the past 6 quarters. Is this category on the whole facing pressure because of what you just spoke about, or are you particularly, getting hit because of competition, because of the pricing environment?
No, we are still market leaders by far. So there's no problem with competition. The market has slowed, especially rural has slowed. It'll pick up next quarter or the quarter after that for sure. You can't compare last year to this year, quarter by quarter. These things don't work.
Hi, Mr. Jagannathan. Good to hear that you're not seeing any signs of slowdown. And I think for you, rural is just around 5% odd. That's right?
That is correct.
All right. And for this year, just plugging in the numbers, you should end the year closer to around 2,800 crores odd?
A little more than that, I think.
A little more than that. So that means quarter 4 is then shaping up quite well. Last year in the same quarter, you did around 700 crores. So I'm guessing that quarter 4, there'll be some growth on last year's base?
We expect that, yes.
Okay, all right. So more than 2,800 crores is what you're looking at. What about for the coming year? If demand is strong, you're holding on to your market share as well. What is the growth you're guiding for in FY24?
We don't give guidance and we're still working on next year's budgets.
But do you think a double-digit number would be fair to assume as of now? Things could change, but a double-digit is something that you'll be gunning for?
Yes.
Mr. Jagannathan, so double-digit growth in FY24. Last time you were on, you had said that margins next year should be a little less than where you would end FY23 at. Is that something where you're
No,
on track?
I did not say that. I did not say that, no.
Okay, so then they should be better, or
Yes.
That's what I have in my notes. Sorry, they should be
Yes.
better than FY23 levels,
Yes,
right?
yes,
How are
yes.
exports doing, sir? You told us that exports are doing very well.
We're unable to supply. The orders are coming pouring in. So we have to, though we've increased capacity fairly dramatically, we're still unable to supply.
So you're saying that there is a backlog. Things are on the export front, more demand than what you're able to meet.
Unfortunately, yes.
Okay, and
Unfortunately, yes.
okay, and how do you get around that? I mean, do you at times like this, do you shift volumes from the local market to the export side? Is that a higher margin business? Go on, sir.
It's certainly not a higher margin business, but there is a decent margin in export. It's not that we're selling at a loss. And we are trying to shift volume from the domestic to export because domestic is slowing down.
Yeah.
Okay. I want to talk a little bit more about this domestic slowdown because in the context of you adding capacity in Gujarat, what would this mean? A, what would your total capacity rise to? And once the whole capacity comes on stream, what will that help in, do to your revenues?
We've added capacity in different areas. We've added capacity in non-stick cookware, in roller coated cookware, in stainless steel cookware, hard anodized cookware, various different businesses we've added capacity. So I can't tell you what percentage, but it'll add about 500 crores to the top line if we use it fully.
Okay.
Add 500 crores to your top line once it comes on. And when does all this capacity come on stream?
We're not a commodity business, so it depends upon demand.
Okay. And just one more question. You said that the entire pressure cooker category has slowed down. And of course, you can't compare it to, the COVID levels because that was a different consumer pattern. But now that, COVID is behind us, do you think the slowdown is temporary or do you think it could be a little more long drawn?
My view is that it's temporary. You see, the rural market penetration is almost zero. And with induction and gas going to the rural market, they'll have to start buying pressure cookers. I believe it's a huge growth story in pressure cookers.
Okay, all right. Mr. Jagannathan, just to get back, your capacity expansion could generate revenues of around of 500 crores if there is enough demand. So at current prices, at peak levels, what kind of revenues can you generate with the current investments?
I said, that's what I said. We can add about 500 crores to the...
No, for the company, sir. For the company on the whole, you're going to do around 2,800, 900 this year. Then you're going to grow in double digits, hopefully. So at peak levels, you can do what? 4,000 crores, 3,800 crores?
If I use my capacity fully?
Yeah.
Is that what you mean?
Yes. Yes.
Oh, well over 4,000 crores.
Well over 4,000 crores with the current investments.
Yeah.
Okay. And in terms of margins, I don't want a guidance from you, but I'm asking because the margins have been all over the place. Like last year it was 17%, this year it's 11%. On an average in FY24, any kind of margin band that you're working with for the company?
I must correct it. This year is not 11%. Last quarter was 11%.
Yes, last quarter is what I meant.
Yeah,
Yes.
this year will be over
The last
14%.
data that we have.
That's more like it. This year will be more than 14%, and we are working between 15 and 17% range.
For FY24, is it?
That is correct.
Oh.
Mr. Jagannathan, you've been in the market at times. You've said that maybe inorganic growth is something that you could look at. Are you scouting for something as of now? Should we hear something?
I'm afraid I can't talk about it at all.
But are you on the, we don't want a timeline, but are you still on the prowl?
We're on the prowl, yes. In fact, we're almost nearing destination.
Sorry, we are almost?
Nearing destination.
Oh wow, that'll be interesting. Okay, so then let's push it a little bit more. By the first quarter of
No more.
okay, what could be the rough size, Mr. Jagannathan? What could be the rough size?
What could be the?
Rough size, the destination, what could the size be? 500 crores, 200 crores, 300 crores, what could it be?
About 500 crores.
About 500 crores. And the cash in your books is?
850 crores.
All right, so you could fund it from that. Interesting.
And are you looking at this calendar year itself?
We're hoping for that, yes.
All right.
Before that, okay, that's interesting.
I was hoping that maybe in the first quarter of next fiscal, first half of this calendar year.
Unlikely.
Okay. Mr. Jagannathan, you know us well, right? We're going to keep pushing you until we get clarity on what's happening. But I'm sure you'll come back to us first when something
By the way, Mr.
comes
Jagannathan
through.
is on the prowl for an acquisition. Have you guys been in the market for a good pressure cooker recently? I have been, and I can I acquired not 500 crores, but I acquired a good 5-liter steel pressure cooker.
So what's cooking,
Prashant? Come home, Sonia. Cook up a meal.
We're asking Mr. Jagannathan what's cooking, and now we have to move
Mr.
you.
Jagannathan, thank you very much. Great speaking with you. It's a good conversation as always, and hope to have you with us here when you do that acquisition.
And
as you said, you're closer to the
I
destination.
And
certainly will
Mr.
be.
Jagannathan, Prashant is talking to you as a co-anchor as well as a customer that he's just said as well. So
Absolutely. All right, we'll take a very quick break here. Thank you, sir. Thank you very much.
Thank you.
And we'll come back. We will connect with Vijay Kumar of Nagar.